Uh, Good afternoon, or I should say good evening, as it's 8:20 p.m. I'm just getting everything set up here. This is Jeff Scott, and welcome to this week's presentation on my weekend review. Crazy times right now, and I'll show you why I say that. God bless and congratulations to anybody that was at Intercept before it made its move. We'll talk about what do you do now with it. Title today is my weekend review. I'm calling this a selective melt-up. It's not really a melt-up yet, as I'll show you. Also called it biotech or bust because, boy, there are some craziness going on in the land of biotech. There's my contact information, the typical disclaimers, education purposes only. Anything I talk about or recommend in the spirit of education, not investment advice. I'm a doctor, not a broker, and I am not affiliated with any software vendor trading company. Things I demonstrate, things I use in my daily trading, and I have paid for everything that I show you. I guess you won't have to see this slide very many more times. We are within one or two signed up and paid for this meeting. There's 3 people I'm counting as paid, even though I haven't seen their checks yet. At that point, I will just call people who send me checks and tell them to go on a wait list. As I said, there's still a couple of slots left, and I've already had one person cancel because of life events, meaning his wife probably realized it was Valentine's Day and said he can't come. But anyways, this is going to be great. George and I are really talking shortly to finalize the agenda. We have Jan Arps, or Hawk Arps from the two from Jan Arps Toolbox will be coming and talking about their tools and their setups. And I'm looking forward to this being an outstanding program. Again, if you haven't heard about it already, then you're the last person who listens to these that haven't. $750 includes my TradeStation indicator set, which I love. $500 will be without the indicators, $850 for a couple. We are now going to have an introductory dinner on Friday night, February 14th at the Capitol Grill, a very high-end steakhouse in Manhattan. This will be covered by your registration fee, so you'll get fed very well as George and I kick off the meeting. And then the meeting will be held Saturday and Sunday in the recreation room in my condo. And we'll be catering in breakfast and lunch. Here's the agenda very quickly. It's all about trading. It's going to be much more practical than theoretical, and it should be very complementary to the Palos Verdes meeting. This weekend, and every couple of years, I want to see what the other folks are doing. And I go to the VectorVest meeting in Tampa, which is the first weekend of the year. And I own VectorVest. I'm sure a lot of you own VectorVest. And it's actually a program that sometimes I wonder if it's too much for the masses and not a professional tool. And then I play with it and I say I should be using it more. And I'll talk more about it later, I'm sure. But it was an interesting meeting, and I had the chance to meet a lot of traders. I mean, the problem is, like a lot of other systems, it appears that people think they can buy the system and become billionaires without learning. And to me, the most important here is learning about investing, and that's why I do this. I follow Ian's rule and dictum, which is to become your own guru and find smart people to influence you. I suggest the same. To me, it was Ian Woodward and Ron Brown, Alexander Elder, William O'Neill, Morales and Castor, Dan Tharp and Bigelow, with a little bit of effective value from Pascal Lane and making some income from Ron Key. I highly recommend these books if you haven't seen them. And I love when people send me books that they find to be critical as well, so I can expand. Like Ann Colling's volume book is another one. My desktop is filled with programs that I've spent probably more than probably $50,000 to $100,000 on, of which I use only a few. I use my real-time charting platform as well as something for analysis, which I think HGSI is the best. Trader for back testing and some market timing, Magenta for seasonal analysis, and MarketSmith. I'm thinking that, especially after this meeting, that I'm going to have to do this, and especially about market timing. And I think that I think that there's something to be said there. I was very impressed, as I often am, with their market timing and their calls. And I'm going to do some back testing and studying it, and I hope to, in next week's report, back up what I put that there. So that is a change from what I've done historically. So are we in a market top or not? You know, when someone on the board put that was the first time ever they were up 1% 3 days in a row. I was up 1% every day this week, and I think that was posted Wednesday. So for all I know, that person was up every day this week as well, 1%. You know, I've had an incredible run. So has George Lee, one of my good friends and traders, and I'm sure you've all had good runs. It feels like a top, but is it a top? Certainly, the indices continue to march higher. I joked with the VectorVest facilitator that these are the most people I've seen in years. He commented it's certainly the highest number they've ever had for options and the highest number overall since 2007. And you know, which then I commented, I wonder if this is a sign of another top. Certainly, the Intercept Pharmaceuticals is a sign of a top or a sign of hysteria. We're going to talk about that. There hasn't been a major correction in months, and the employment number, you know, using the vernacular of my 25-year-old son, sucks. But then again, PE range is not at an insane level. There's been plenty of papers out talking about how the PE has room to expand. Interest rate levels remain low. The worldwide economy allegedly is improving. Our Fed is certainly still accommodative, with Janet Yellen getting approved. Will be a continued Bernanke type style we expect. Congress will probably be quiet until it's a debt ceiling story in a few months, but some of the initial budget things are done. And as I'll show you, the buckets do not show extension. Now, I wish I would have blown this up more. Canaries are squeezing. The 17, the 50 are all coming together, and they are a little bit off their high, but they're holding. And they're at a point where if we truly are at the top, then we might see these do a very quick move up before this market tops. So I'm going to be watching my canaries closely. While the LLURs, our early market warning system, are at all-time highs and show no letting up. But it doesn't look necessarily that we have to be at a top. Now, I put these up last time, and I just wanted to talk about them again. Netflix has been selling off. Netflix has been having some issues. Netflix, this is last week's chart, certainly doesn't look that exciting right now. We'll see where Netflix is right now. Maybe it's getting closer to that 50. But Netflix, this is the season of Netflix. And you could argue that Magenta Trader was 100% correct, because Magenta Trader suggested some additional weakness for at least the first 10 days or 12 days of January, and then a rocket ship. In fact, starting on the January 21st, 9 out of 10 years, Netflix has been up an average of 23.6%. That's a pretty phenomenal move. So I know some people are already starting to think about buying some out-of-money calls on Netflix. And boy, wouldn't it be neat to see a pullback to the 50-day moving average, allow you to buy some 1 or 2 strike price out calls with low delta, and then pick up some big profits if you get a 23% move. And at the same token, Google and a lot of the internet stocks keep pushing higher. And again, this is last week's chart. And this is the season of Google shorts. And at least from a seasonality perspective, one expects Google to potentially roll over here. So it'll be interesting to see what happens in those leaders. Comments about Intercept Pharmaceuticals. I don't know much about this company, but let me play like I do. They make a drug to treat something called NASH syndrome. NASH syndrome happens to be non-alcohol related scarring of the liver leading to cirrhosis. I believe it can be caused by numerous different things. Cirrhosis and liver failure is a terrible, terrible problem. Because of low awareness of hepatitis C in the population, there's potentially as many as 2 to 4% of the people are potentially at risk for NASH syndrome. And many people will not ever be, will die of it because they have too many other medical problems for a liver transplant, or there's no donor available. So what I know about Intercept is that this company that had a market cap of about $2 billion and a stock in the $60 to $80 range, and really going back months, not really showing much, had some data come out. And interestingly, the move was on Thursday and Friday, but even Tuesday and Wednesday, you could see some volume and some pocket pivots. They had some data come out which suggests in an early trial that they can improve some of the scarring in the liver. And that sent hysteria and a stock price that got close to $500, putting its market cap at the high at about $10 billion. Pharmacyclics and Jazz are two companies that are in the $8 billion range. Both have drugs that they sell. Jazz, which makes $8 a year in earnings, and Pharmacyclics that just created potentially the best drug ever for a very common leukemia disease, is a biotech with a single product and 24 employees worth the same as Pharmacyclics and Jazz. I think not, but perhaps someday it will be. As a person who studied and participated in drug development, there are 3 phases of a drug development study in humans. The first is somebody has a compound that they think may treat or may be effective in treating something in humans. The first thing we do is we take that compound in a phase 1 trial, start with a very low dose, and give it to patients, usually with bad diseases who are dying anyways, to see that if there's any benefit. And we push the dose to the point where there's severe toxicity. So this phase 1 trial allows us to understand what dose might be effective and whether or not it's safe, and it may or may not give us evidence of any that it works. So phase 1 studies on Intercept's drug are done. Phase 2 is we now know how to give the drug. We think we know the side effects, and now we're going to try it against various conditions and then see whether or not there's improvement. So in the phase 2 study of Intercept's drug, they studied it in 200 or 300 patients, and they saw an improvement in a liver damage score. Now, that's very exciting, and that's what drove the craziness in this stock. Now, that's a phase 2 study. It is likely, highly likely in my opinion, that the FDA will require a phase 3 study of several thousand patients with NASH comparing Intercept's drug versus no therapy or whatever standard therapies are used today. And different than just a microscopic score of improvement, I suspect that the feds will require that NASH patients either live longer, delay the need for transplant, delay some evidence of liver failure, and demonstrate lack of significant toxicity. There was a news article this weekend that showed that the patients getting Intercept's drug had some cholesterol issues. So this isn't ready yet. And I actually got up on Friday and initially was going to hit the short button or buy some puts. But thank God for me, the NASDAQ's option system was screwed up. And the first half of the alphabet didn't have quotes, updated quotes for options until afternoon, at which point the thing had gapped off, and I said, you know what, I'm not going to get in front of a train. I'm not going to get behind the train that's backing up. I'm just going to sit back and I'm going to watch. If you owned it at 80, God bless you, enjoy the run. If you want to get into it now, let me introduce you to an old friend of mine. This old friend of mine is called Entramed. ENMD is the stock ticker name, and I'm going to go back to when I was practicing medicine as a cancer doctor in 1998. On Sunday morning, the New York Times, front page, Judith Folkman, world-renowned researcher at Harvard, Dana-Farber Cancer Institute, has released news that his compounds, which he's sold the rights to Entramed Pharmaceuticals, eliminated cancer in laboratory rats. That's pretty exciting. So across America, all these smart people, like us individuals, felt we knew something and we got a scoop by reading the New York Times. The stock closed approximately 12 on Friday. Sunday morning, many of my friends put in market orders. Buy 10,000 shares, buy 40,000 shares of Entramed. Why? Because at 12 bucks, 10,000 shares is only $120,000. And to some, in the old days for physicians, that must not have been a big deal. So we're sitting in the lunchroom, and the doctors who were smart enough to buy Entramed were just so excited because the stock opened up at $85 a share and traded up to $100. I kid you not, they were looking at catalogs for Ferraris and Lamborghinis, new houses, and new wives, frankly, because of the newfound wealth that they received from their Entramed. You could see it's a little different pattern, but a stock that was going sideways, and then based upon news, huge volume and a giant gap up. Sound like anything that you know of? Now, unfortunately for my friends, they got home that night with 14 voicemails from their broker. So I guess the first thought must have been the broker is calling to congratulate me for being so smart and because I made so much money. Nope. Stock closed at 30. They bought, imagine you just bought 40,000 shares of the stock at $85. All right? And then you get home and you find out that the stock closed at $30. You got the margin call from hell. I have physician friends who got divorced over this, physician friends who went bankrupt over this, and I'm sure it made for some really non-fun times in a couple of bedrooms because of this. So let's just think about 40,000 shares, 10,000 shares, 1,000 shares of a $50 market call, a margin call, and what that would do with you. So the moral of the story to me is the stock came down, never saw those levels again, and is trading today after a 10-to-1 reverse split. So if you look at a chart at 98, you'll see the stock going up to about 850 to 1,000. With a 10-to-1 reverse split, it's trading at $2 a share. So God bless Intercept. Let's cure NASH syndrome. Let's be a home run, but not with my money. Don't miss the upcoming meeting in Palos Verdes. I know there's been a lot of discussions on the HGSI board. You know, people need to let Ron and Ian know they're coming. I'll be there, as always. The website, highgrowthstock.com. I've talked about this enough. Free software if you're new to listening to this. You'll see me using it extensively. For those who are really new, look me up on YouTube or on the website, and you can find, at this point, probably a couple hundred webinars like tonight, videos. Again, shameless promotion for our upcoming meeting. And parting message, go back to what I learned from Ian. Do your reading, do your studying, get your education, become your own guru. Investing is a business. Make sure you have the right employees, meaning tools and software. continuing education matters, and trade the market we have, not the one we think we would have or should have. Now, note to one of my friends with the initials DS, I'm going to do your stocks at the end, so you have to listen until I finish. All right. Enough of that. I mentioned that I had a great week. I'm sure all of you did as well. Hope so. If not, why not? Are you buying the wrong things? You need to be doing something differently. I always like to start by reviewing the week that was. It gives me an idea of how I did, whether my style is working or not, and gives me a sense of what the market's doing. So within HGSI, and I'm not going to go through how you do it, I'm just going to look at the results. There's a tool called Group Performance Analysis. I looked at stocks that I would have bought at the end of May, Friday the 3rd, and sold at the end of the day on the 10th. I used the closing price, and I looked at the different watch groups that I follow that I looked at last weekend. My goal is to always beat the S&P 500. My goal is to make sure that I am not way underperforming the IBD 50 or HGS 100, and to recognize that when those indexes are doing poorly, I'm probably going to underperform the S&P 500 because my stocks more closely reflect those. So the first thing I want to do is notice that there's a lot of black and a little bit of red. So black is positive on the week, red is negative, so you can see by far there are more positive watch groups. That's a bullish thing. The winner were the Ian and Woodward Smart Group for strong EPS, relative strength their 52-week high. 2/3 winners, up 23% for the week, and you can see the big winners there. How many of these did you own? Well, Intercept was actually so. Word to the wise, these things work. And this is a week ago Friday, when the stock closed at $69, Intercept made the list of strong earnings per share, relative strength, their 52-week high. So I could have found it. I didn't see it. It had no earnings, and I'd looked at it. I wasn't interested in it. It shows what I know. And it was up 544%. Now, it only impacted a small amount on this group because it was only 2.89 shares. I own YY, I own Jazz, SoFun, I own Eris, I own Spirit, we talked about that a lot. I own Hertz to the downside. But you see a lot of great stocks just on that list, and that list is automatically calculated. Let's find the S&P 500. Somewhere around, not very high. Here's the S&P 500 at 0.6%. So despite the feeling of a melt-up, or excuse me, feeling of a positive week, the only melt-up was in Intercept. The broad indices were up a little bit, but nothing to write home about. The HGS 100 was up 1.37, so growth stocks outperformed, as well as the IBD 50, the same, twice what the S&P 500 was. I was pretty happy, as you can see somewhere up here. This isn't perfect because it doesn't look at position sizes, but somewhere above there, I think it was in the 2.3 range. Let's see. My stocks were up 739 versus 14, down up 2.5% for the week. It felt like a positive week, and it was a positive week. And what's interesting is the ones that I put on my buy watch, which probably more reflect what I have in my portfolio today as I roll out of current holdings and buy new stocks, they were up over 3%. Just tells me that the types of stocks that I like to buy were working. Now, this here is probably my favorite group. So what I've done is I'll show you how you can do an edge rater. I'm now every day looking for stocks with a mobile breakout, with a PSAR flip within the last 2 trading days, who were in a squeeze within the last 2 days. So I'm looking at stocks that are pulled back or going sideways because they're moving edges together with the squeeze, that have a momentum move, as indicated by the mobile breakout, and it flipped their parabolic stop and reverse indicator. And you could see why I like it, because it's every day it's positive, 32 to 3 over the week on the things that hit a week ago Friday, up 4.86%. And that's becoming one of my best buy watch lists as I go forward. We'll talk more about that. And these are things that we're going to talk about at my meeting in New York, as well as hand out the software so you can do it yourself if you bought the TradeStation indicators, and help you do it on Thinkorswim. No Hindenburgs, no surprise. Interesting that as this run started around Christmas with the Santa rally, you could see a couple of days were 10% new highs in the NYSE. That's gigantic. And it's cooled off a little bit. It's still pretty high, over 6%, but almost no new lows, and we're nowhere close to a Hindenburg. I mentioned bucketology not necessarily showing a top. You know, we've got a fair number of stocks, 12% trading above the upper band, but the biggest number is between 70 and 80%, and you could see only 67% are above the mid-range. I'd expect this number to shift a lot more, a lot higher here to 80 to 90, and see 30, 40% be in these last two groups before the buckets are signaling a top. If I look at how the markets are performing, and if you're looking at this and going, what the heck is he talking about, come to New York or come to Palos Verdes, or go look at some of my old videos. Green is good, red is bad. This gives me my percent B. So if I know that an index is at 0.72, I know it's midway between the mid-band and the upper band, the Bollinger Bands. When I don't even care which index is which, green is good, yellow is intermediate, red is bad. I could see that we were really good. We had some weakness, and we have less weakness now. When I saw this bar here, I saw everything above 1. I knew that we were likely to start pulling back because that was extended in the markets. We are not extended at this point by percent B. Percent B times bandwidth actually gives buy-sell signals, and green is a buy, that is a sell, and we are strongly green, which tells me that this market may still go stronger. Another thing I'd like to do is what was working last week. And this is using EdgeRater. It takes 3 seconds. You can look at what, performance reports. So, I'm all about the ERG. One of the reasons why I haven't been a big VectorVest fan is they use proprietary indicators called VST. ERG is EPS rank plus relative strength rank plus group rank, all to be up to 99. The highest you could be is 297. And what Ian has shown us over the years consistently is that the higher the ERG, and this is ERG left to right higher, the higher the performance in the market. And you could see that there was just some big movements in some of the very high ERG stocks. I'm sure ICPT probably is affecting this one a lot because of the percentage move. Bottom line is you want to buy stocks that have high ERG as one of your thoughts. Earnings, relative strength, and group rank on the short-term basis, and again, probably skewed because of ICPT, you can see the group rank mattered a lot this week. I also think it's because biotech is going into a bubble, or potentially a bubble. It feels like a bubble. Maybe it's not a bubble. But, this, I think, is driven by biotech. Relative strength rank has been the leader. High relative strength stocks have had highest performance. Earnings per share, hard to say there's much of a trend there. Clearly, higher group ranks, A to E stocks outperform lower ranks, which actually were negative. And in this short period of time, the boxes really didn't tell me anything. So this, to me, gives me information so I understand the market and know how I'm going to use it. So now I want to go look at the market. So I like to go into TradeStation very quickly. And I want to see the major indices with Elders indicators. So I look at the S&P 500. Going sideways, upper end of the band, below the upper band, it's green, which is a potential buy. Blue on the weekly, blue on the monthly. It doesn't look topping, it looks healthy. Now, I also noted that on the way up here, these intermediate highs did not break the midline of the MACD histogram. The last high did. If we take out this high, I want to see a higher MACD histogram. If I don't, that's evidence to me with some divergence that this market's not going to go on much further. And again, I've said that for a while. The NASDAQ, up near but still below the upper envelope. It is green, blue, and blue. It too had a higher histogram than the prior, so breaking the divergence. If it goes to new highs, we're going to be watching that. All clear and viable. The Dow is probably the least healthy of the bunch, sold off some, but it's still in the upper part of the range. Blue is sort of a hold to me. I can buy, I can sell, I can hold. No firm rules what I can or can't do. Blue in the weekly and the monthly. And it too broke the height of the MACD and sort of broke some of the divergence pattern with the last high. I look at these, I kind of see health. Now I haven't looked yet, and it's 8:51. I wonder what the futures are doing. And let's just take a quick look at pre-market data, and they're not doing much. And the way they've been, they have no relationship to what the market's going to do anyways. So I feel okay there as well. Now let's take a look in HGSI. So I'm going to open up my warehouse view. I am going to go to top-down view. I'm going to go down to user groups. I'm going to Woodward and Brown. This is the last set in 12.8.13. I'm going to look at major markets plus, and let's see where the strength and weakness of the market is. So the strength, the transport's leading, so I guess as a Dow Jones theorist, that would be good. No shocker, the NASDAQs and the small caps, where most of my holdings live, are doing well. What else do I see there? Gold, interesting. Let's wonder about gold. We're going to come back to gold in a few minutes. What's not working, volatility. The big stocks underperforming. We saw that with the Dow, oil, and gold, and the dollar. Let's take a look quickly. You're all rolling your eyes when I say quickly because you know better. S&P 500 continues its nice chugging along. It's above the 8, above 17, above the 50, and above the 200, so it's the right order. It's in the upper part, but not extended above the Bollinger Band. Sort of in a nice place. Could go either way. Certainly not looking to me like it needs to roll over, and you can see here it's come off the top of its high jump. I would say very viable looking. Take a look at the NASDAQ. Looks almost identical to the S&P. We were going back 2 weeks ago when we hit the top of the band, and we were a little bit concerned. It sold off to the 17. We're much more closer to the 17 than we are to the top of the band, and I would say, like the S&P, still looks very viable. Now, the Dow Jones was the weakest that we looked at earlier, and you could see a lot of red here, but frankly, going sideways. And it wouldn't shock me to see it take a move up. It's a pullback with the force and the daily bond go red, while the longer force 13 in the weekly and in the midweek bond goes holding green. So that's a positive as well. So the indices look to me healthy. Russell 200, healthy. Up here, I always get nervous because when you get to the top of the Bollinger Band, we often see it come off. When you get to the middle, it could bounce here or it could go all the way down. I think it's at a perfect bounce point, although time will tell. What's not working? The VIX continues to languish. Last week, it was up here at the 50. It failed the 200, failed the 50, getting back down to where it has a tendency to bounce from, maybe another 1.5. So the VIX is currently not a big problem. Commodities look like crap. They look a lot like the VIX. Not much with the commodities. The dollar, dollar fooled me. I thought we were going to see a dollar rally, and the dollar looks like it's just stalling out here. And we'll see. Maybe the squeeze will set up and it'll break. hearing all kinds of cross currents on the dollar. Will an improving U.S. economy lead to a strong dollar? Will the dollar be up because of the relative strength of the U.S. dollar versus the rest of the world where easing might be continuing longer? Or will the trillions of dollars that the Fed are printing to buy back bonds ultimately turn out to be inflationary? And will we get hit with an inflation surprise and see a dollar drop? I think I'm more long-term in the shift category. Peter Schiff, who would think that the dollar is going to be weak. Short term, I was still expecting the dollar to have some strength. We shall see. I'll have to see what Bilardi's doing with his Aussie versus U.S. versus New Zealand dollars. Gold. It could be, it might be, it may be, it may not be. I mean, I had a nice email from a fundamentalist, I think he jokingly called himself, suggesting that now is a great time to load up on gold. It might be a time of our generation to load up on gold. Look at where my cursor is. We came down to the same level in July. We came down and tested it here. So you have a one-time test, two-time test, three-time test that have held. We're now at the 50. We had a kahuna, pocket pivot, and a DI crossover, and everything went green. I don't know too many cross currents from a big perspective for me to feel strong about it, but I kept saying I wouldn't buy gold until it got above the 50. It gets above the 50, I might start nibbling. Then it's going to have to get above the 200. You can see it's failed here in the past. So, but I have to give the fundamentalists credit. I think that this might be the season to start thinking about gold. I've not pulled the trigger yet, but I'm close. Silver, similar patterns, up right below the 50 with a kahuna. Be interesting to see. So not sure yet, but I see why you're thinking that way, Mr. Fundamentalist. We look at, just look at the health of the S&P 1500 with the eye charts. The things that Ian and Ron put together that really do a good job at looking at some of the internals. So the first one is looking at the new high, new low number, which continues to go higher. And then, so this is the high versus the lows, cumulative over time. And the red is a 13-day exponential moving average. You want to see that number continue to go up, and you want to see it above its moving average. When it gets below the moving average is when we typically see a lot of weakness in the market. And I bet if I went back, I'd probably not calculate. Well, let's see. Yeah, I'm not calculating long enough that. If you went back with this at 07, 08, you would see the index way below the moving average. Green is good, so still very positive there. You look at the A's going up, the E's going down. You look at A accumulation distribution. The A's have clearly turned up, and the E's have turned down. The B's are up. What else can we see here? A versus E is percent of A and B versus their 10-day exponential, about to creep over a top. If you want to make the argument of why we're not at a top, this is a good chart for that, because during times of a top, you'd expect to see this pattern here, and you'd expect to see the difference between the A's and B's and their 10-day moving average to be closer to what you see here, not just breaking out. So arguing that we may have room to go. No 5-to-1 advancers or volume last week, no surprise. I think we're still in relatively modest volume, certainly no 10-to-1s. Looking for one specific chart now. Here it is. So these are the percentage of stocks above their 20, 30, 15 day moving average, and how they reflect to their moving average of that line. Now what's kind of interesting and what we know is that the more extended we get above the moving average, the more likely we are at a top. And we are not even at all extended on any of them. So I see a lot of evidence here in the buckets and frankly the charts, that this market can run further, barring unforeseen news items. Let's go down and look now at industry groups. And we're going to go force 2-day up. And we can see that of the 145 groups, 70 of them are positive. This is a double compared to last week. To the downside, probably just a couple. Computer hardware, managed care, department stores, insurance, investment bankers, diversified banks, chemicals, oil, gas storage. Okay, let's look at what's working. Let's go through these very quickly. Biotech. Only one really is above the index, and that's Intercept, and I don't think we need to spend too much time talking about this. God bless you if you're in it. Enjoy the ride. Be careful. Don't let Intercept turn into mankind. Forget the numbers. One of my friends and I had a text argument. He wants to be in this. He thinks it's a great stock, and I told him it was speculative. And Mankind had some news come out on Friday. Thursday had a Bible gap up, had a big move on huge volume, and it sold off on Friday because the news was not an FDA approval, but rather that the FDA is going to set a date for a independent panel to review, which is pretty standard. I think a lot of people want to see the stock do a lot. I owned it back here. I've been out of it after this chop. They have a drug for diabetes that's been turned down 3 times. Doing. And, you know, you might get your 3rd turn down here. So this is not for faint of heart. You don't buy this drug unless you're willing to deal with the big drawdowns of when your drug gets turned down. What I told my friend is that this could be a $2 stock or a $12 stock, depending on it's approved or not approved. It's been turned down twice. My guess is that the odds are it will be approved, but Dr. Ghilardi has already weighed in a little bit on the board with some great comments about even an approval. There may be logistics around this that are problematic. So the same guy asked me about BioLace. You know, how do you get excited about this chart? It's got minimal revenue, doesn't make money. Yes, it broke above the 200-day moving average. It had some volume, strength in the group because we know the biotechs are great. It's got no dividend, no surprise. It has ROE minus 77%. For some reason, institutions own a bunch of it. It trades 500,000 shares a day, so it trades enough. But its market cap is $109 million. Ghilardi and I could buy the whole company tomorrow. I mean, what kind of a company like that? Mostly Ghilardi's money, not mine, by the way. But no, in all seriousness, this is a dinky company with a market cap of $110 million. It's extremely speculative, and it's not an investment. You might as well go to Vegas because you have a better chance of winning there than you do on this player. He had another stock which I've never heard of before. So let me see if I can even find it in the universe. So I'm going to go into all securities, and then I'll come back. I apologize for taking this detour, but I promised him that I would look. Of course, we'll see whether he actually listens to my video because I know he's going to be pissed because I'm slamming his choices. But you know, there's investing and there's making silly decisions, and I think he's looking at this is the other one is called Accelerate Diagnostics. Obviously, he doesn't watch my videos on the other stock. All right, so here's a stock. Again, I don't know how you buy these stocks. Trading at $13. It's had a nice up from 6 to 13. That's nice to see. Laboratory analytics. Well, it's a great story because patients die of something called sepsis all the time in the hospital, which is an overwhelming infection. And if you actually had tools that could give you a rapid diagnosis of what the infection agent is, you could treat the patients quicker. It's a great story. It doesn't make money yet. It's developing and then will commercialize. You know, it's got a better chance than BioLace, which is why it's $13 and not just $3. It's got a market cap of $550 million. You know, a little bit more interesting, but I don't know if the stock's going to make it ever. And it certainly, there are other stocks that I would buy that have a chance of actually working on a much shorter period of time. And I'd rather put my money there. In fact, what I put on the board in relating to Intercept is buy some box 1s, 2s, and 7s that double within a year or two and spend the same amount of money on them. You're going to probably do better than you have a prayer of doing on Intercept. So we're back here. So let me go back into biotech. So anything else looks interesting? You know, a lot of these are extended in price. However, I will say that Biogen, great company, leader. You want to buy this off the 50 or close. It's starting to run again. Love this company, and it will continue to be a leader. Insight is an interesting story. Outstanding management team. A lot of guys, especially one that I know well, came over from Amgen. This is not because of their current product, it's because they've got a pancreas drug in trial. Very exciting story, high risk, but all of these with drugs in trial took off this week on the Intercept. They've had a big run here ever since they had some positive results. It went from a $20 stock to a $50 stock. Doesn't make enough money yet, but it's about a story. I continue to think Gilead will be a big winner this year in the hepatitis C, HIV, and cancer market, and a lot of people are making this their number one pick of 2013. This is what you invest in instead of BioLace. Galena shows up a lot. Great story here on the momentum indicators. Had a big run from 2.3 to 6. I think it's toppy, although you could had a viable gap up, and it hasn't violated necessarily the gap up yet. They've acquired some products, and they'll be bringing a cancer, I think a pain product to market soon. Big valuation for the story, probably more than I'd be willing to pay for it. But then again, you never know. I'm just going down through here to see if there's anything else. United Therapeutics had some great information come out. An expensive stock, but probably not if you look at its long-term growth prospects, sort of giving us a flag here. And, you know, I would draw my trend lines above and below the flag. When it breaks above the flag, I'd probably buy it. It went up 25 points, and you'll get the majority of that 25 points from when it breaks above the flag. And I think you have another run in United Therapeutics. So biotech is strong, and a lot of these we've talked about several times on this call. Airlines, big bull. My big position is Delta, and I took a position in Southwest. Continue to work, starting to get a little bit more extended on Delta. Southwest, you know, these are great stories. I think you have I guess secular is a big change, a secular change in the airline industry, where they're even talking on CNBC. They used to joke about airlines about being a great way to lose money, and now they're turning into valid investments. You get rid of, you know, Eastern and Northwestern and Continental, and now American, and all of a sudden you have every seat being filled on the mainline carrier. Spirit is one that's had a nice move up ever since the merger was approved, and a lot has to do with because they're going to pick up some seats at LaGuardia. So hope you have an airline. We've talked about them enough on our calls. They continue to work. Big Pharma. So the other company that's creating a NASH drug is Galectin Therapeutics. Galectin Therapeutics went from 8 to 17 this week because of NASH's news, because of Intercept's news. So they're another company in the same group looking at fibrotic disease, in this case in the liver. Preclinical drugs in development, make no money, make no sales. I'm not going to tell you to buy those. Forest Laboratories did an acquisition last week. hear my words, made an acquisition. The street is rewarding acquirers. I was looking at this, and boom, big move up off the 17 with a kahuna volume, probably long-term a good story to watch, maybe a little late to get in. Talk about late, but a great story is activists. We've talked about this every week for a year, even longer than a year. The old Watson, big move, lower left, upper right. One of my favorites is Valiant. You can see it, had a big move up this week. They came out with their 8K and talked about earnings going forward. Clovis is another preclinical company with a drug for cancer, and you can see all these companies rose in response to the Intercept, as everybody wants to be in the next Intercept. They're expensive drugs. They make a PARP inhibitor for ovarian cancer and maybe breast cancer. QuestCorp, for those that like to parachute and walk and do bungee jumping and do other life-risking events. Here's a stock that's in a long-term uptrend that has pulled back because of multiple news events and is now sitting on top of the 200-day moving average from which it jumped with kahuna on Friday. This is one where calls are expensive. The only way I play this guy now is when I buy it and I sell calls to strike price out. And typically that buffers the drop because the stock is so volatile. It makes money, has drugs on the market, but it's the poster child for short sellers. Jazz, all that jazz, talked about this thing every time we were on the call. And Bruce Brotaw and I have made a fortune on this puppy. I know you're going to use his last name because he talks about it on the web all the time as well. Great story. Bruce and I are probably in it since it was an $8 stock. Why does this company go up and up and up? Look at the earnings per share. It makes huge dollars and has growth rates. Why does Valiant continue to go up? It makes huge dollars of earnings and has big growth rates. Stock price is determined by multiple times earnings. If you make no money, then I look at market cap and people put values of discounted cash flow on a company and give it a multiple and then give it a stock price based upon potential. Your price goes up by growing earnings. Your price goes up by expanding the multiples. That's usually more of a big fundamental change in the marketplace. Earnings and growth rates are good things. You can't beat those. Enough grandstanding. Go back. Home builders continue to show some interest. I'm in Pulte, Lennar, and SPF right now, but I'm in them and I'll get out of them, and I'll show you what I mean by that in a second. They broke above the 200 2 weeks ago. We've talked about them. Pull back to the 17 and a bounce up with a pocket pivot, all green. Good time to buy again with volume on Pulte. Lennar looked the same. D.H. Horton looks the same. KB is below the 200. Toll Brothers looks the same. The index looks the same. Looks to me like it wants to run again. So home builders have been strong, and I'm seeing a lot of action in some of the companies that make support. There they are. Construction materials, cement. I'll look at one. I'll look at Eagle. Doesn't get a lot of respect from a multiple perspective. Let's look at it on a weekly chart first. Big run up here from late 11 up until middle of this year. It's been bouncing around. It's back to pretty much near all-time highs, or could be a triple top. But what's kind of fascinating to me and what I like about it is the earnings per share. The stock makes money hand over foot, trades at a multiple, half of what the earnings per share growth is. Everything is green, had a pocket pivot. Seems to me like a natural time to buy into Eagle. There's other stocks in the group. Go take a look at them, make your own decisions. Healthcare equipment. This one I didn't even pay attention to. Somebody showed it to me over the weekend. Is Intuitive Surgical back? Well, I'd go and do some research, check the news. So that's a huge move. A couple of pocket pivots the days before, and a huge kahuna on Friday and volume. right up to the 200-day moving average, everything is green. It'll be interesting to see if it gets turned back there, or is it going to break out after being in a nasty, nasty correction since peaking back in 2012. I'm going to guess it fails here, but what do I know? I want to watch it just like you are, and I'm going to go check the news and see why. This one made my list. What a beautiful lower left, upper right, breaking out to new highs. Green. I'm wondering, are these being driven by Obamacare? Anything that sells a product will sell more of it because more people are insured. There are some tax issues that Obamacare put in there on the device makers, and perhaps they've all raised their prices to deal with it. But several of them here, Stryker, not as pretty, but a gradual upturn breaking out here as well. Don't know AfterCure at all, but a big viable gap up here. Doesn't make money. Does have some revenue. You might want to take a look at something like that. The other group that will benefit big are the drug distributors, and I'll look at them in a few minutes. Communication equipment. So the networking stocks, Riverbed had a buy come in. Some interest showing up on Cisco, which at 47 million shares a day is always near the top of the list, but it's below the 200, so I'm not interested in it. Yeah, nothing here is stuff that I made on my buy list this week. Let's go back. Internet software and services, LinkedIn. You know, is it a good time to buy LinkedIn? I don't know, maybe. Pull back to the 200, if it breaks above the 50, you got nothing above it. You got no moving averages. You got no obvious resistance, except you got some overhead supply. Starting to make some money. That might be an interesting thing to look at. I hate when I do that. Baidu's moving again. I guess the darling here is the Chinese stock auto that's had a big run-up, corrected. Looks to me like it wants to run again. It's kind of at its all-time high breaking out, and it does make money. There are earnings the following quarter, just not in the HGSI database as of yet. Semiconductors. Now, Micron made my buy list. Probably should have been my buy list for a long time. I've had some. Talked about it several times. I'd rather buy it here on the 50. It's breaking out again and have great earnings report and continues to be shortage of DRAM in the marketplace, which gives them pricing power. Canadian Solar is probably the biggest winner of the year. He was up 500% this past year. How much did you own? You had opportunities to buy it several places. Breaking out here, it's extended. It's going to make a couple bucks next year. Great earnings per share growth rate. Maybe it's a buy again if you don't have a solar stock. My big solar stock is Jinx Solar. Same pattern as Canadian. Big move this year. Great earnings per share. Also going to make about $2 this year. Seems to be more subsidies and more interest in the solar stocks than we've seen in the last couple of years. And then if you want a cheap stock, that looks interesting. This is Lattice Semiconductor. Pulled back a little bit to the 50-day moving average. Had a big move on Friday with a kahuna. 2 kahunas in a row. BI crossover, mostly turning green. Great earnings per share growth. That's also, by the way, has a mobile breakout from the squeeze. So this might be one to look at as well. Just to do what I like to do on the 10th. Oil, gas, and services. Something's going on here. All three of these look the same, and I think they all look viable. In fact, I actually thought more Baker and Halliburton. I have a huge Halliburton position, so they all have bullish engulfing patterns. Now they're below the 50, and they've come down hard. Here was a couple negative pocket pivots, but on Friday, big volume, a kahuna. They make money. Baker Hughes looks the same, big bullish engulfing pattern with a belt hold. It took off multiple days with a pocket pivot, a kahuna. I mean, you don't get that pattern on that kind of volume unless something's happening. That's huge stopping volume here in this decline. I expect Baker to move up. It's got great earnings per share growth. And Halliburton, it's not as obvious, but a similar pattern here with the kahuna. Something's going on with these stocks as well. enough for the upside, but just quickly to go through, you can see automobile manufacturers, gold, so maybe it's time for gold. Casinos, I continue to like Las Vegas Sands, MPEL, MGAM look interesting as well. REITs, which I don't know how to buy, also seem to be popping up today. Alrighty. Now, what else do I like to do? I'm not going to spend much time going through them. Maybe I'll comment on some of the stocks. I go to all securities. I look up sprinters. And these are typically very strong stocks, highly rated fundamentally and technically. 151 of them on this filter. The one that you probably have would be up here in the Woodward and Brown. Let me go up to the right place. Groups here under, there's so many groups now, I got to clean this up. Under Mr. There it is, Springer's One Step of Bongo, about 115. As I said, these are typically extremely strong stocks. Just take a look at what's up here. Insight was that company with a great management team. Biogen, IDEC, my favorite, perhaps of the biotechs, but expensive one. Cardinal Health, this is my old employer. On Monday, I told people to go out and buy McKesson based upon what we saw on my chart. This is Cardinal in a big bull run, lost two of its biggest customers and got stronger. Earnings don't look good because of the lost customers, and I thought this would be a tough year for them. On the other hand, they've been able to reposition cash, and they're actually, Wall Street seems to find them a darling, and they're priced much cheaper than their peers. So for all fair disclosure, I own a shitload of their stock. I never sold a share of what I got originally or what I got when I left the company because I'm a big believer. And it's not just in Cardinal, to be honest, and I'm not an insider there anymore. It's in the whole group. Here's McKesson, and you can see on Monday buy. Well, it sort of shook out and took off on Tuesday nicely. But we looked at it right at the open Monday as being very strong. Kahuna's on Monday and Tuesday, big volume coming in. The other one is ABC. They're all a little bit different, but they all move drugs from the manufacturer to the retail pharmacy to the hospital pharmacy and into the home. And if more people are using more drugs, they make more money. And unlike drug companies and biotechs, they really don't care which drug you use. They make money on the logistics side, and they just care that people have insurance, or they don't care about the insurance, they care they have volume. There's Valiant and St. Jude, there's Activist, there's Jazz, there's Southwest and Delta. Here's another one I like a lot, Atlantic Company, another generic manufacturer. Breaking out here of a squeeze area. I wonder if it's a real squeeze. I'm still looking at the charts. All green with a pocket pivot. So that little sprinters, all you got to do is that real quickly. I'm going to finish with my top 30 by group inclusion filter. Let's go through them. And as I've talked about before, this is a simple test that I do within HGSI. I typically do it daily. I certainly do it a lot over the weekend. And what I'm trying to do is look at, I started by all those watch lists. And what I'll do is I'll build out these watch lists every day. And then I know the ones that are working, and I figure out if these are groups that Sprinters was up 7.94%. Simple one filter, 120 stocks, 110 stocks, up 8% last week. My God. If I know which groups work, and I just see which stocks are in most of those groups, which are the stocks with the highest number of group participation, then those are probably the best stocks. And those are what I call my GIF All-Stars. They didn't do so hot this week, where are they? They were up 2.18%, so 4 times the S&P and double the IBD 50. Not too shabby. So I run that test. It takes 2 minutes to make it happen. Make sure I'm in my, let's go find my group inclusion filter All-Stars, and we're going to finish by looking at these 30 in rapid fashion. Then I want to point something out on my indicator set and say goodnight. 3D Systems, I own this. I've owned it since it was 45 when it broke up here. I started with a bunch of calls and rolling my calls, and then I executed them, and I'm probably going to either start writing calls against them or cash them out. This had a huge run. I don't think the fundamentals today support it, except what does support it is the fact that this is probably the first inning of a doubleheader of technology, of excitement over 3D printing. So maybe it's not overpriced, maybe it's cheap. Activist is Watson, we've already talked about it. Ambarella is a networking company, sold off hard this week. Might be looking for a bounce, but I'm not interested. Harris Group is another technology company, I think telecommunications. I own this. Had a nice run up here, pulled back to the 8-day exponential. Great earnings per share coming into the stock. I put this on a watch list, and I look for a bounce because I think this one's got more room to go. CalAmp always has great earnings. No one seems to care. Running again off the 50 here, pulled back a little bit. Certainly is a leader. I never get too excited by this stock. DealerTrack Holding, I think they make the new automatic shuffler. I can't look up computer design. Banks, credit unions, finance. So software, technology for banks. And a nice move, selling off on Friday, probably not interested. Delta Airlines, I already said, love this stock. I have a big position in it from way over to the left. Getting extended, to be fair, but I think this group continues to run. eHouse China, will this be the next VIPS? I think this is more real estate. It's more like SoFun, which has been a big mover. It's had a big move up here. First phase, second phase, third phase. It may be breaking out again from this, which will be a fourth stage breakout of my calculation, so getting extended. But it does have earnings per share coming into the stock. Facebook, we talked about it all the way up. It's something you need to own for long term, kind of at all-time highs. Generac, they make the generators. We've looked at it several times. Here is it with a flag, breaking above the flag. Continues a steady run. IBD talked about it last week. Hertz Global, another holding of mine that I've been less thrilled with, sort of in the big picture has been sideways for me. Pull back here, a little bit of a flat. We'll see if it runs again. I'm less enthused by its fundamentals. Interactive Corp broke out, going sideways. See if it breaks above. iGate, fundamentally challenged, I guess, by earnings per share. What a beautiful chart. Nice move up. Who says it needs to stop? Investment, I sold it when it broke above the 50. I missed the rally. It already looks like it's pulling back, which is why I sold into it. Jazz, one of my favorites. Lower left, up to right, still has great growth. We already talked about it. Lynette is at the generic house we already talked about. I guess if you're building all these new houses, you need to put furniture, so Lazy Boy. Pocket pivot down on Friday, a little bit of a pullback, not my favorite of the bunch. Got earnings per share. I look for it to give me evidence that it was breaking above. Metadata, a technology play. Healthcare technology, lower left, upper right. It's a leader, although it's gotten kind of loose. This is what I do. I try and find lists of good stocks, and I go through and look for stocks at buy points. New Skin, what a beautiful chart. I don't like how they're multi-level marketing, and sometimes it smells like Herbalife, but how can you disagree with this chart? And it sold off here because there were some Senate investigating weight loss companies and their claims. Lower left, upper right, clearly a leader, great earnings per share growth. PGT Industry, they make some of the plastic siding, and I guess I could make this into a bit of a saucer, starting to form a handle. Might want to break out. Everything is green. If housing goes well, the stock should do well as well. Here's another Chinese company. I bought this stock. It's I don't know why I bought this stock, but it's a Chinese entertainment stock. Fondo weekly still red, so still hasn't given me a buy signal there. Pull back, looks like it wants to move, probably early in the move from my perspective. Have this one, love this stock. This is like eChina, a real estate internet. Big move up here and a steady run, a triple from there since July. This is one of my best performers of the year. still looks like it wants to run more. Ignore these numbers. There's still earnings coming into the stock, but do your own research. We talked about Southwest, talked about Spirit. The online education companies for profit have been running, and the Chinese one looks like they're leading. This is TAL XRS. Also, New China Education. I bought into DeVry about 8 days ago to have a nice little puff. Here's our technology company with good earnings, UBNT. We'll pull back, but on Friday had a positive day. I've been looking for a Kahuna or something to come in. And United Rentals, kind of like other stocks that I like, Manitowoc and HGSI, companies that are involved in the mining equipment industry and construction equipment. And you can see this doesn't look perhaps as impressive as it should. So let's look at a weekly. This is a stock that was a $6 stock in 2009 and is now a $78 stock. I've had it for a long time. Fundamentally, it's been very sound. Earnings per shares are starting to slow down, which is when I start to look at getting off the bus. But when I looked out further, the earnings look fine. WisdomTree ETFs, we talked about it a lot. Looks like it had a tough day, selling off on Friday with a DI crossover down, so I would skip that one for now. Yandex, Russian internet play. It's by far from tight and well behaved, but it is a lower left, upper right. Had a couple pocket pivots last week. Everything is green. And then YY, another one that I personally own. I don't think my friend George Lee was happy with how I've managed this. Let me show you what I did. I got into the stock. My price was 50, and I got into the stock in early October. So my guess is I got into the stock right there. The stock did nothing for me for 3 months, and now it's up $14. The $14 increase has occurred since January. George was surprised that I held on to the stock, which I bought at $50.10 a share, when it got as low intraday as $43.50 here. And so that would have been a $6, so that's a 12%. I basically, on this stock and a lot of these other high flyers, this dashed line here is a 65-day exponential moving average. And I'm giving enough porosity below the 50 on some of these stocks. And it didn't close below that 65-day exponential once. And that was where I left my stop. So, I probably was too loose. I could have gotten back into it here and not put my money at risk. We've gotten back into it here with a Kahuna going above the 50, which is one of my favorite signals. But that's how I manage that. Probably not the smartest way, but it's profitable. So the point of this was not to show off how many stocks I own. The point of this was to show you that within HGSI, whether I look up sprinters, whether I do a group inclusion report, there's the ability to very quickly find high value, high opportune stocks. Lastly, I like to put up what I thought were interesting stocks that made my buy list for the week, and then you can look at them and do what you want. I point out last week my buys were up over 3%, and probably all of these are stocks that we've talked about. USG I want to put up for 1 second. USG is in the building products. They make gypsum, so I guess they go into wall boards. They've had some legal issues and some earnings issues. Here's a box 7 turnaround. Look at the earnings per share coming into this stock. I think this stock is breaking out. And on the weekly chart, a couple of weekly kahunas, it breaks above this point. It's pretty much at a recent high, and it closed above that point on Friday. Lastly, I apologize for the length. Yes, as the Lord says, I must like to listen to my own voice. If you have TradeStation or if you have Thinkorswim, you could do exactly what I do here. And what I do is I have some custom indicators built for me, and I'm tracking things such as green candle low, red candle high, but I'm tracking squeeze. I'm tracking a mobile breakout in the setting of a squeeze. So frankly, don't really need the squeeze anymore. But now what I've done is I've developed an indicator in 3 different time frames looking for MOBO breakouts from the squeeze and a PSAR reversal. And I scan for them during the day in radar screen, and when they pop up on these, I start to look. But what I really am doing is, and where it works the best, you don't have to be a day trader. I'm not a day trader. I trade during the day when I can. Is I run scans every night. And these were the scans, MOBO breakouts from the squeeze, the PSA reversal up. So these are the stocks that have my trigger that I'll be watching closely on Monday. Now, why do I bother showing you these? I mean, I'm certainly not trying by any means to show off. That's not what this is about. This is about helping you figure out how you can make money too. As you know, as I pointed out before, I don't sell you anything. I don't own anything, any companies to sell you. My meeting in New York is at a break even. The reason why I show you that is because, and I got to do more studying, and maybe my buddy Chris White can work with me on with EdgeRater to help me test this over a long term. But I kid you not, that had I just bought the stock, and every day seems to be similar. MOBO breakouts, PSAR from a squeeze. Mondays were up 6.3%. Thursdays were up 5.44%. Wednesdays were up 5.44%. Tuesdays were up 4.86%. The ones from last Friday were up 3.75%. All 30 of them were up overall for the week since then. It's not the holy grail, still looking for that one, but it's a pretty neat little way of finding stocks that in the short term are likely to go up. So come to New York, and we'll learn new tricks together. What I'm going to do this week is I'm going to go and play with my friend Vector Best. And what I'm really interested in and really want to spend time in is their timing module. And it went on Friday at the close to a strong buys across, so a very powerful buy signal. And you can see here the indicators all the way in the green. So there'll be something that I'm going to do some back testing of their various methodologies and see maybe we should be including at least their market timing into these views, these reports. You all have a safe, healthy, and happy year. You all have a great trading week. Just don't be the last person buying before this market rolls over. And it's always a pleasure to do this for you. And have a great night. Thanks, everybody. Bye. Are you